We are now about 9 months into the trade war between the United States and China, and the president telling business leaders on Monday he's confident the U.S. will come out on top, but there is some concern that reciprocal negotiations may weaponize regulation on American companies in China. We want to bring Phil Levy into this discussion. He's the former White House trade economist under President Bush and the senior fellow on the global economy at the Chicago Council on Global Affairs. David Nelson, Scott Gamm, of course, still with us as well. So there's this report out now that could be some sort of reciprocal enforcement tied to the trade negotiations. Yeah. And there's been some alarm over that. Do you think that's justified alarm? And how likely do you think that this is actually going to happen?
I think it is justified alarm, and I think the Trump administration's gotten themselves into a bit of a fix where the options don't look terribly good. This all has to do with their desire to keep their options open to strike at the Chinese whenever they want, or whenever they think the Chinese have done something wrong. The Chinese don't like the idea of that working just in one direction. They say, great, we'll each strike at the other whenever something's wrong. And American business isn't that enthused about being subject to Chinese justice.
What does all of this do to the role of the WTO also? Does it sort of make it irrelevant?
Yeah, that's a great question. So a lot of what this is doing is circumventing the WTO, that we'd built up over years this sort of established system where you'd have impartial judgments, where somebody other than the sort of participants in a dispute would say, you're right, you're wrong, and here's how much. This moves around all of that, and it gives up some of the protections that offered.
Of course, at the same time, the Trump administration has been critical of the WTO, saying it's too slow, it's not effective enough. So, I mean, how do you sort of address those concerns at the same time?
So it's even worse than that. They've been critical of them, and they've been blocking key appointments. So the WTO judicial system is about to fall apart. Probably by about the end of the year, they simply won't have the appointees. There are some legitimate criticisms in there. What the Trump administration's been very slow to do is offer remedies, to be precise about what they'd want, how do you want to fix this. Instead, it's sort of asphyxiating it.
And isn't this part of President Trump's broader criticism of institutions, whether it's the WTO, NATO, the EU? I mean, that's kind of his shtick, right, is to criticize these institutions that we know and we trust.
Yeah, but do we really trust them? To be fair, the WTO, what have they really done? This is an agency, or rather an organization, a regulatory body that classifies China as an emerging market country. That's ridiculous. You know, it gives them an advantage. You know, I don't see it as a viable entity anymore. And in the end, won't both these countries do what they want to do anyway? We both have weapons. We're going to use them.
So what's the point of the trade negotiations at all then? If we're just going to do what we want, why not just have a free-for-all when it comes to trade?
Both parties, if you don't like something, you do something, you go to war over it. And that's what this is all about. We're just, for the first time in maybe 20, 30 years, actually bringing up the conversation. We've instituted tariffs, have gotten people actually talking. Everybody was kind of against this, but people are at least talking. We're sitting down talking. Us in the EU, we're talking. Us in China, we're talking. Before that, we weren't doing that. We were just rolling over to any demand they had.
But I guess, how do you fix the WTO, right? That seems to be the heart of the answer.
So the first thing we were talking for the last at least two administrations. What we weren't doing was necessarily shooting ourselves in the foot and saying, hey, look, we've taken action. I think that's the problem with this. Yes, China is called an emerging market. They also have a per capita income so that the World Bank considers them
It's the second largest economy on the planet.
You're absolutely right. And that's why when China joined the WTO, they had to undertake obligations that were much more severe than your average emerging economy had to do. And I think the trick is, we do have the alternative of having a trade war. That's painful. That's why we reached these agreements in the first place. And what we are seeing, you're quite right, this is the sort of general aversion to any sort of rules or multilateral deals that could constrain us. But there's a real cost to breaking free from all those things.
And so what do you think happens in this particular case? As these negotiations continue, there has been pretty broad optimism that something is going to get achieved between the U.S. and China.
Well, remember, they can define what achievement is. And whatever they come up with, President Trump will tell us that it was amazing and fantastic and revolutionary. They have a choice, which is they can do something in the fairly short term, which will be relatively modest. That will open them up to criticism because they were the ones who said, and I agree, there are some serious problems with China. We really need to do something about it. If they really want to address those problems, they're going to need longer-term solutions, and they won't be able to come up with them in this sort of short-term time frame, not before the elections.
Right. Don't we have the advantage here? I mean, the math simply does not work for them.
For the Chinese.
For China. I don't
Well,
see how
they did just report GDP growth that was higher than estimated.
They can report anything they want. Divided by 2, that's probably the closer number at this point. They've been reporting inflated GDP numbers for 30, 40 years.
Yeah, I think you're right that China is having a hard time. Only some of it is because of U.S. trade policy. They also have debt problems and other issues. The problem is that we are not really giving them an option where they have an incentive to do what we want. That the administration has made 4 deals with the Chinese over the Trump administration's short time in office, and 2 of them were rejected almost immediately by the president after his cabinet secretaries struck them. So I don't think China has great confidence that they can accommodate us and then get trade peace.
I would think that President Xi, politically, it pays for him to drag his feet until 2020. Hope for a change in the administration and have a better playing field for him in terms of a negotiation. It's not that far off.
Well, and the issue with that is a lot of the Democrats, some of the progressive Democrats, actually have similar views on trade to President Trump. So maybe President Trump's sort of hawkish trade policies continue even if he loses in 2020.
Okay.
Well,
possibly.
I would ask as well, there have been a lot of dire predictions about the effect of this trade war on the U.S. economy, the effect of tariffs, and we haven't really seen that bear out as of yet, or have we? What am I missing?
No, I think you're right. We haven't, obviously the market's done fairly well, and some of these we expect to play out over time. The White House has been fairly strong in pushing the idea that this is a short-term problem, which means that we haven't had companies rework their supply chains, for example, to the extent that they might. If, however, you're presenting them with a sort of long-term trade war, and you say, look, if you're producing sort of advanced medical devices in the US and your parts are going to cost 25% more, but you produce them in Canada and they won't, that is going to have an effect over the longer term.
I mean, there's also been a lot of talk about the effect on consumers in terms of increased costs, and that we haven't really seen that play out as of yet, perhaps because we haven't seen the full array of tariffs brought to bear.
Yeah, that's right. And in the China case, when they did that first $50 billion, it was sort of studiously avoiding the consumer products, which make up a very large chunk of what we import from China. I think that's one reason why the president has been notably cautious about escalating with tariffs the way he threatened to do, which is why you saw deadlines there for January 1st, there for March 2nd, and they all sort of went away.
Yet even if we get a trade deal, I've read reports that President Trump wants to keep whatever tariffs are on against China, keep those in play as sort of an enforcement mechanism. And he's made many comments kind of liking the money we're bringing in from those tariffs. I guess, what do you make of some of those thoughts?
Yeah, well, I think he's mostly mistaken about the money we're bringing in. I think for the most part, that's Americans paying this money, which is unfortunate. I think what that shows is the difficulty for other countries in striking a deal with the U.S. because the president wants a deal, but he doesn't want to liberalize, and he doesn't want to be constrained, and he doesn't want a commitment. And for them, that takes away most of the value that there would be in a deal. And that's why I think, yes, you do have this foot dragging.
But what about, Phil, what do we do about the deep threat of the theft of intellectual property? Look at their J-31 strike fighter.
Yeah.
It looks exactly like a Lockheed Martin F-35. I mean, that's espionage. They are actually stealing our military secrets, and that's not even being talked about now.
I think there are serious problems with theft of intellectual property, with cyber attacks, and we have some real concerns about state-owned enterprises and subsidies that the Chinese give. The problem is that those legitimate, serious concerns are getting mixed in with some nonsensical concerns like bilateral trade deficits. And it's diluting our message, and at the same time, the U.S. is attacking its other trade partners, alienating them instead of engaging them in these common concerns. So those concerns you mentioned, those are very real.
All right, Phil, great to get some time with you. Thanks for coming in. A good, deep discussion here on this China issue. Phil Levy is former White House trade economist under the Bush administration. Appreciate it.
Thank you.